Good evening. This is the Smart Investing Show with your host, Alton Brooks. Tonight, we're taking a report card on the economy, so let's go. Good evening. This is Alton Brooks, aka The Wolf. And you have me in studio this evening as we're talking about tonight the economy. And just like how students have grades and they have to pass, we are also taking grades on the economy too. We're going to see tonight if it's doing well, if it's doing good, if it's doing bad, or if it's doing ugly. Tonight's show is brought to you by Fifth Dimension Trading. I am the chief strategist at Fifth Dimension Trading. What we do by day is actually teach people how to fish. We figure that it's better to teach you how to do something than to have it just handed to you. So we actually teach you how to trade. Everyone's got a smartphone. Everybody's got all kinds of access to the internet, but no one knows what to do. So we at Fifth Dimension Trading will teach you how to make those trades. And also, if you wish for us to use our proprietary systems to assist you, we do that as well. So that's what we do by day, and thank you, Fifth Dimension, for tonight. So let's get into it. Let's get started. Let's go to our first slide that we're going to talk about tonight, the economy and the report card. So this evening, we're discussing some key elements that affect our gross domestic product, otherwise known as our GDP. Now, you might not have heard this term before, but that's what we do here at this show, is we introduce you to terminology that you might not have heard of before. So when you watch other programs, you won't be any worse for the wear. You'll actually know what's happening and what they're talking about. So there's nothing gross about the gross domestic product if you're thinking of something that can upset your stomach, unless it's bad news. But we're looking at gross as the totality. It's a measure of the entire spectrum of goods and services that a country can produce over a period of time. So if you think of, for instance, government spending, that is a function that's included in our gross domestic product. When they spend money, it has a side effect of producing either a good or a service. And anything that is created by government spending is included under gross domestic product. We look at also imports and exports are included in this number. If we export more out of the country in our goods and services than we do in importing, bringing in products and services into the country, that would be considered a net export. And that would be added to our gross domestic product, or total value of goods and services. We also include business investments into this gross domestic product, GDP. And also included is consumer spending, consumer goods, which includes residential, housing, construction related to your personal residence, and so on. Also, we have on the business side, transportation and other subsectors that make up this entire GDP. Let's go to the next slide. So tonight we're going to break down a couple of the main components that's affecting our GDP right now. And that actually affects the report card that we're going to get on this economic conversation tonight. Let's talk about residential investments, which is part of your personal consumption side. Well, I can tell you what it isn't. Residential investments is not a measure of house prices. Everyone might be thinking, but every house is now $1 million. So that part of it should be going through the roof. It's a huge number. But residential investments has nothing to do with your house prices. What it is, though, and what it has to do with is the construction that you spend money on in your residential side, renovations, and it also includes ownership transfer costs as well when it comes to real estate transactions. Now, you would think in a normal circumstance that renovations and construction would be the leading indicator in this particular area because of all the activity that's going on. Well, contrary to popular belief, the transfer costs are actually leading the way right now. The biggest driver in residential investments currently are real estate fees, otherwise known as commissions to the agents. And that can be a huge amount based on 5% on $1 million as a typical transaction fee. That's $50,000 on average to real estate brokers and agents for $1 million transaction. Land transfer tax is another big part of the transfer costs, as the governments will take a part of your sale, transferring your title to someone else, and charge you a fee for that. Legal fees also are a part of this. But what's not a part of it right now, not a huge amount, or at least as big as it should be, is new construction and new renovation. When you think of buying and selling a house, it's really just a pen transaction. It's you signing on the dotted line that you're just going to give your title to somebody else. Nothing really moves. There's no investment in upgrading the house. You don't necessarily have to do that. You can put a paint job if you wish to just make it look nice, but you don't have to really do anything. There's no new construction when it comes to that. That only happens when it comes to a new house. So let's take a look, for instance, business investments normally average 8 to 12% of our GDP, our gross domestic product. Now, just in case you're wondering what the word domestic means, it means within a certain country, in this case within Canada. So our gross domestic product within Canada. Business investments normally take up 8 to 12% of this total number. Residential investments, though, normally take up 4 to 7% of this GDP. But what's happened because of COVID, the numbers have been inverted. And what that means is that not a lot of people have been moving, but a lot of people have been using the pen, to stroke the pen to make a transaction, to sell, or to buy. So our residential investment number has only been moving based on real estate fees, land transfer tax, and legal fees for the most part. Construction, renovation, those have not taken part as much as they should. So the business investment side has suffered at the hands of everyone staying put. And COVID, has done that, where you, instead of maybe taking 2 to 3 years to decide to move, now it's taking maybe 4 to 5 years for someone to do that because of the uncertainty of their jobs, or uncertainty of moving up to get a higher income, or just uncertainty in being able to pay their bills. So because of that, our real estate residential investments are really moving because of the fees being charged by those who are processing the transactions, and not necessarily due to the activity from a business end. And we're going to take a look at that by this chart that we're going to see right now. As you can see, the black line is your average business investment. On your left, you have the percentage of your gross domestic product that produces. So when you invest in business, when you invest in capital products, when you invest in employees, when you invest in all these things to make your business run, when you invest in hiring more construction workers, you're averaging typically 8 to 12% of the GDP services and products. Residential activity and investments, on the other hand, usually is a very small part of our GDP. But if you look at the very right-hand side of this chart, you'll see that somehow the bottom chart, which is your residential business, has now outgrown your business investments with that crossover, with that little circle that you see there. It's never happened in probably 30 years that your residential investment has now outperformed your business investment. So we may think that the housing market is hot and it's great and everything is doing well. But when you look at this small little chart, it actually speaks volumes and tells you that this is not a sustainable or something that we should continue doing for the long term because it's hurting business. We can't just be a one-trick pony. Our economy cannot just depend on people flipping houses, just putting pen to paper and hoping it goes up 100,000 in 3 months, and then selling it to someone else and hoping that goes up 100,000 in 3 months. Because that's really what's driving our residential investments right now. Just buying a house and hoping that the value goes up, and next year you sell it to somebody else for another $100,000 profit, and so on and so forth. But how long can that continue? That cannot be the only way that we derive GDP out of our residential investments, to the point where it's actually now overtaken business investments, which has never happened in 30 years. And if this continues, this will be bad, very bad for the economy. We need business investments to prop back up to their average over the last while, which is 10 to 12%. And we need residential investments, which means prices may have to go back down, because that's the only way we're going to have a sustainable economic expansion. It cannot expand with the way it is right now. You cannot invest more in your residential side than in your business side. Business investments is what drives the economy. And as you can see, we've been in a bull market since 1990. The economy's just been going up, up, up. And that's because the residential investments have been kept to a minimum, while business investments have been kept to a maximum of our GDP. So we need to have a reversal to happen in this particular chart for our economy to get back on track. Let's go to the next slide. So as we mentioned though, COVID-19, it has had an effect on the directional change that the business investments and the residential investments have had over the years. But one strange fun fact out of all this, and we've seen that there's been a ton of real estate transactions happening throughout even COVID period and now. The weird factor though is that there hasn't been an increase in the number of realtors. So even though we're driving residentially and transactions, including real estate brokerage fees, have been driving part of that GDP number, normally what happens is a bunch of realtors will jump in and say, hey, I can make a quick buck. I can make some money selling a house. I'm going to get my license. And usually that number tends to go up along with the transactional level of the real estate investments. But for some reason, a lot of realtors, maybe they're smarter than I am, but they've decided that being a realtor is not something for them, even though residential investments has been exploding and the price of homes have been going up. So that's just an interesting thing that happened that normally does not happen. Normally, as residential investments do well, more realtors come in and get a license. So it's just kind of odd that that hasn't happened this time, unless they see that as a temporary thing and they just want to jump in because eventually in 6 months the business cycle will correct itself. We'll have to see and wait and see how that plays out. But we do have to keep in mind, as I mentioned before, we can't just depend on rising housing prices and flipping homes as a measure of success. The housing markets are starting to slow. Nationally, over the last 3 months, prices have actually gone down. People are just becoming more rational. There is such a thing as irrational exuberance, where at all costs, even if it's $200,000 more, you're going to buy that house because you want it and you're going to outbid everybody. But we all know that's not the best way to make a purchase. It should be based on your income and your debts and what you can afford with all the expenses and budgeting that you have put together. You should know there's a number that you shouldn't cross because it puts yourself more at risk. And it shouldn't be a buy at all costs kinds of scenario. So some people are starting to understand that. They're bidding less or overbidding less on certain homes. And many times they can buy the homes much cheaper, but because of that illusion that others are bidding higher than they are, you're then forced to put even higher prices than you're willing to pay for. So housing markets are slowing, so that's going to bring down that residential number that's currently higher than the business investments. That does need to correct, and this is part of that correction by having the market slow down. Business investments will also start to go up. And one of the reasons for that is going to be the increased confidence that some business owners will have going forward. And what's causing this increased confidence? Well, if you look at last year, the sky was falling. Everyone was running for the hills. COVID was the big bad monster. But for 2021, we see that COVID has started to be tamed just a little. Vaccinations are in full force. There are many, probably 50 or 60% of the population that's been either given one dose or two by now, and there are many that's been fully vaccinated. Now, the argument between vaccinating and non-vaccinating, that's a different topic. But that's also going to be something that affects business. If you work in a business environment, are you going to be comfortable working with someone who is not vaccinated? And you might be vaccinated, or you might have someone at home that is vulnerable to you receiving COVID. So do you continue working at an establishment that is not vaccinated or does not say that you have to say that you're vaccinated? If you send your child to a daycare, are they going to tell you whether they've vaccinated themselves, the folks who look after your children? Or if you go to the gym, are only vaccinated people allowed, or will you then have to risk that piece of equipment that you're going to use has now been infected? So when it comes to business and work and this vaccine, there's going to be a lot of questions to be answered. But the good thing is that business themselves do feel that because of the vaccinations, that's starting to help them to think that the economy will not close down again, and that they should start making some more investments. So you'll see that business number on the GDP should start to flow up because of the assurance from the vaccines that the economy will not shut down in full once again. So between that and the housing market slowing, they should eventually switch places once again to bring everything into unison. But right now, housing is still more than business, and that's not a good combination. So it's a good thing you heard that here first. So don't go running just to buy a house at all costs. And as well, keep in mind that businesses will take their time to decide to hire and to invest, as those are long-term decisions. And they're still in somewhat of a wait-and-see mode to see what happens with the vaccinations. But so far, so good. All right. So we've talked about some of the things, the two areas that we're concentrating tonight, talking about the state of the economy, which is the residential and the business side of investments. Now, when we come back from a quick break, we're going to continue, but we're going to talk about the transportation area and also technology and see how this is going to affect our economy as well. So we'll be right back after these messages.
Are you craving some home-cooked African meals but are missing the authentic ingredients? No worries. Head over to Dunami's Food online groceries at www.mydunamisfood.com to check out our collection of the best quality African and Caribbean foods. From swallows to spices to meats and produce, expect top quality customer service and have your groceries delivered to your door when you shop at Dunami's Food. Don't forget, go to www.mydunamisfood.com and get a taste of home. It'll be like you never left. Dunami's Food, keeping you smiling always. Nous vous gardons toujours le sourire.
Welcome back to the Smart Investing Show with your host, Alton Brooks, aka The Wolf, when he talks about investments and stocks and business. Tonight we are with GBKM Network in Toronto, and you are probably all over the world, Caribbean, Africa, Canada, United States, Peru, Brazil. Welcome to our show. Don't forget to download the GBKM app so you can have access to all of our content 24/7, radio, TV, and lots of live content and shows for you. So thank you again for joining us tonight as we talk about and have a report card on our Canadian economy. We're going to touch on the transportation sector. In this area, we do have a lot of government spending in this area. We also do have a lot of business spending too. One of the bigger entities in this particular area is Air Canada. It's one of our two major carriers, the other being Porter Airlines, but Air Canada carries the bulk of the commercial, I would say not commercial, but consumer type air travel. That's taking folks to vacations, taking them even for business, I guess commercial as well, across Canada and the world. They are the largest entity in Canada. And they pretty much were locked down for all of the last year due to COVID. No flights going in and out, except for maybe emergencies or, for carrying goods, etc. But we're starting to turn the corner again because of the vaccinations that's been happening and the level of vaccinations. Restrictions are starting to ease. And what Air Canada is finding out is that bookings have started going up. There are many now that have an intent to fly, which is a very important gauge when you're in the transportation industry. It's one thing to go and buy a ticket, but what they're really interested is, are you having an intention of getting a ticket? Because the more people with an intention means that the more potential demand, and that then spurs them to go out and lease more planes and hire more people. So there's a big intention to fly right now, and demand is increasing. So they're looking to turn the corner. And as an investor, as you're looking at the economy opening up, and them being one of our largest delivery service when it comes to flights, you may want to look at the Air Canada stock, and we'll look at that in a minute too. But over the past 3 months, it's been hell. Air Canada lost $1 billion over the last 3 months. That's a lot of money. If you average that over an entire year, that's almost 1.2, or make that $3 to $4 billion over an entire year. Because that's $1 billion every 3 months. Keep in mind, though, that there's some businesses that are too big to fail. And Air Canada happens to be one of them. In fact, they were gifted by the federal government with some aid worth up to about $6 billion that they can draw from to continue operations. So even though they're losing $1 billion every 3 months, hopefully that will slow down a bit as the economy opens up and the air flights open up even further. But they do have $6 billion available from federal aid to help them survive and get through this period. So the government spending has helped to bolster their particular business. Also, the other thing that's happening actually today is the federal government has eliminated quarantine for the fully vaccinated starting this morning. So if you're someone who's fully vaccinated and you're coming into Canada, you don't have to quarantine starting today. So that's one good thing, and that's spurring more interest in people traveling. Nobody wants to be quarantined. You got to pay hotel fees. It's a very inconvenient thing to do. So if you're fully vaccinated, that's no longer an issue. U.S. borders are also open, which was not the case before. So if you're fully vaccinated, you can now travel freely with the U.S. and then come back without having to be quarantined. This will also be the case for international travelers to other countries on September the 7th, about a month from now. You'll also, if you're fully quarantined, been able to not worry about, if you've been fully vaccinated, you won't have to worry about quarantining for international flights starting September the 7th. So this is all good news for Air Canada, and it's also good news for their competitor, which happens to be Porter Airlines. They have recently bought 80, that's right, 80 brand new airplanes in anticipation of getting off the ground and having some super flights all over the world. And they plan to actually fly out of Pearson International, which is a change, and that'll be a lot more easier for customers to use their services instead of being in the sort of downtown core, using the airport down there. They're going to be using our major airport, Pearson International, so they'll be flying right next to Air Canada. So congratulations to Pearson for buying those 80 aircraft and seeing that demand is coming back, and we certainly hope Air Canada will be turning it around. Let's take a quick look at the Air Canada stock. As we can see from this particular chart, which dates back to September of last year, we see that in early October, the stock price was about $10 a share. It's gone up and down since, but if you'd bought at that $10 level, you'd have doubled your money. It's currently sitting at around $20 per share. If you think the economy is going to continue running as it is and not having to close down again and vaccinations will work, it's probably a good time to buy in on Air Canada and see what's going to happen down the road and see if you can make some money. Let's look at another stock. And this is one of those stocks, Bombardier. That is a manufacturer of airplanes. Now, when you think about it, every year a certain amount of airplanes have to be removed from service and a certain amount of new ones have to be purchased. And as I just mentioned, Porter Airlines is buying 80 brand new airplanes. They may not be buying them all from Bombardier. Could be buying from Boeing and Airbus and all these other competitors, but Bombardier will get their fair share of the business. And as you can see from this particular chart, Bombardier was selling for 50 cents on the dollar starting this year in 2021 in January. And if you had bought this stock at that time, you would have 3 times your money right now, a 300% return. All because you'd have bought into a stock that, if you were thinking ahead, would say, there's going to be some demands for planes seeing that vaccines are rolling out. So maybe these plane manufacturers and other aerial type manufacturers should do well. Because you got to keep in mind, the stock market is always looking forward. When we're in September, we're not looking at September. We're already looking into February of next year. So in January, we're not looking at January. We're looking at June, July. And that's where we saw the economy opening up, vaccinations being fulfilled, quarantining going away eventually. So you take that opportunity in January because you're looking forward to the economy opening up. And that would have been a terrific trade. In fact, this was one of our fifth dimension specials on our trading alert system. This did come on last month for us at about $1 or so. And many of our paid subscribers was able to take advantage of this particular stock and made a nice 50 to 70% return. And many are still holding, hoping for more. So thank you, Fifth Dimension, for having this on your trading alert system, along with those who are taking the course and utilizing the trading service. Let's go to the next slide. So one other thing that we can talk about when it comes to the economy is technology. And we've seen that over the last year, technology has really come to the forefront and has really been adding to our GDP on the business side. And one of them is Shopify. You might have heard of this company. They've now become one of Canada's most valuable companies. Just last year, they might have been averaging about $500 million in sales every 3 months. But guess what? As of right now, they've doubled that. They're not making $1 billion in sales every 3 months. So they've gone from making $1 billion per year in revenue to now $4 billion per year in revenues. That is a huge leap. And they're up 50% in revenue since 2020. Not only that, but their profit has doubled to $300 million from $105 million. So when we're looking ahead, like I just mentioned, never look now in the present. Always be looking in the future when it comes to stocks and investing. Post-pandemic, online retail will continue. So what that means is that those that are winning now on the online space will continue to win in the future. So take a good look at Shopify and other companies that are winning online to see if you should add that to your portfolio. Let's take a quick look at the Shopify chart. Now you can see here, going back to September, October of last year, this stock was selling for $1,200. It is now a cool $2,000 per share because of their rising revenues and their rising profits. So again, you can easily look around and see some of these stocks because they're in the news all the time. So if you look at their financials and their numbers are rising, the profits are rising, the sales are rising, it's kind of like a no-brainer. And it certainly beats getting 0% per month from your bank account, which they will take $20 from every month and leave you with less and less in your savings account. There are many stocks that you can buy that at least break even for you or make you money. The stock market on average will make an average of 10% return per year over time. So if you get $100,000, you'll make 10% or $10,000 from the stock market on average. Where can you get a 10% return right now from the banks? You definitely can't. So this is, again, one of the stocks that you should definitely consider looking at. Let's go to the next slide. And here we'll look at some of the winners that we've had recently through Fifth Dimension Trading. Again, our trading alert service gives you a heads up on many of the stocks before they break out. And many of our paid subscribers have been taking advantage of this for some huge returns. I mentioned Bombardier previously. That's up 70% in the last month. Subscribers are able to take advantage of that. Another very simple public one is Moderna. They've been providing, along with Pfizer and BioNTech and others, Novavax, vaccines for COVID. Guess what? These are proprietary formulas, which means that they charge money for them. So when you're delivering 50 million vaccines in the US and Canada and the UK, that's a lot of billions of profits and billions of sales. So even if you know nothing about stocks, just think about it. Why would you not buy some of these vaccine companies? They're making $1 billion off putting things in your arm to make you well. But put some money in your pocket, not just in your arm. Buy the stock. So we captured Moderna. It's an expensive stock. $250 was our buy price. But it's currently traded today at $500 in a matter of 3 weeks. So that's 100% profit in just a 3-week period. Another one to look at is the crypto space, cryptocurrency, Bitcoin. On the Toronto Stock Exchange is a company called Hut Mining. We picked that up at a very low price and was able to get a 40% return in a matter of just 1 week. This crypto has been doing really well over the last couple of weeks. Now keep in mind, there's a lot of talk of taxing cryptocurrencies. In fact, the US representatives and Senate and so on, they're all sort of deliberating on what they should do about it this week. So you may in fact see some volatility in this space until they make a decision on how much and how often and how many institutions or how many levels in or up or down that they're going to tax. If it comes all the way down to the retail user like you and I and they're going to tax that, that's going to cause a big hit on the cryptocurrency investments and they will fall a lot. But if they decide to leave that alone and only tax a very small percentage of the handling of and the processing of cryptocurrencies, then that'll be good for it and it'll continue to go up. So this week, until they make a decision on Capitol Hill on how they wish to treat cryptocurrencies, it's going to go up and down. But so far it's been really well. In fact, Hut Mining did really well for us. So we're very happy about that. One final one is SLI Standard Lithium. Which we can just go back to Standard Lithium for 1 sec. This is a metals and mining company. As we know, with a lot of electric cars and everything being good for the earth when it comes to products and services, batteries are going to be needed. And lithium is one of those things that's required for batteries. So lithium stocks have been doing very well. In fact, SLI Standard went up, I believe, about 40% in just a couple of weeks of holding that for our registered users. Let's go to the next page. All right, so we've talked a lot about tonight, the report on the economy. We've talked about business, we've talked about residential, we've talked about government spending, a few other things. We'll just quickly touch base on some of the speeds and fees in case you're someone who loved the numbers. So unemployment rate is currently at 7.5%. It's roughly the same as before. It's about 0.3% less, so a few other people were able to find some work. The economy added 94,000 jobs, mostly full-time, in July. In June, there was 231,000 jobs added. These are mostly part-time. So we've gone from part-time hiring to full-time hiring, which is actually a good thing. It means now people have more stable jobs and more hours to work with. Hotels and food services added a bulk of it, 35,000 positions. But here's the thing, though. We're still 250,000 employees short of where we were before COVID started. There's still a ton of people out of work who were working prior to the pandemic. So that's why when I showed you that chart earlier, when it comes to business investments and residential investments, we need more business investments. We need more businesses to think that things will get better and that they start investing into the economy, which includes investing in hiring. Unless that is done, these 250,000 people will not find work that were currently working prior to COVID. So again, I warn Canadians not to be a one-trick pony. We cannot just depend on housing. We have to have other investments working, especially business investments, so that that capital can be put to work and that people can be hired to go along with that. And I certainly hope that these 250,000 people can find employment real soon. One good thing about the numbers, though, is that the youth and women have accounted for the bulk of the new jobs in July. So that's always a great thing, because I just love when I hear that youth have something to work at, to work for, to be positive about, and especially for women also. So congrats to those who are able to find jobs. And I think for the most part, I'll give a B to the current state of the economy. But that is predicated on, again, business investments rising to the challenge. If you're out there and you're a business owner, things will get better. And you just have to invest now and know that those assets will return, a greater return for you in the future. So feel free to continue doing that. And for those who are in the housing sector, don't turn it into a bubble, because if it bursts, it's going to be a lot of pain. So we have to be very careful. Thank you for joining us this evening. We really appreciate you, the viewer, and for spending this time with us. Have yourself a great week, and I'll see you next Monday night.
Yeah, this is Dr. Rod, the boss of all.
GBKM TV.